Hello, you're watching InstaForex News. To complete the list of the most important items at currency markets in January, there must be also stated the following points. The fourth point is related to the public debt. Some countries' governments, including the United States, will have to take the situation under closer control in order to prevent from further damage to the monetary system. The fiscal policy tightening can result in slower growth pace of the economic activity in the second part of 2010. The fifth issue is the interest rates, because the investors' attention is compelled to the USA to determine when the Federal Reserve System is going to put up the rates. It seems to be later than the market participants think. At the same time, we will possibly witness the rates advancement by the central banks of Asian countries, Australia and New Zealand, that will improve the attractiveness of these countries' currencies. The inflation is the sixth point. Price bubbles begin forming in some countries, for example in China, that causes inflation fears while the activity remains weak. Meantime, Japan is one of three countries which continue struggling with the deflation. Point 7 is about correlations which we can see between the share and currency rates and between the primary goods prices and currency rates. In 2010, a stiffening of negative correlation can be observed between the dollar rate and gold prices, especially if the inflation becomes the first problem to solve. The risky currency rates are likely to orient to currency market events. The last issue is concerned with China and its currency policy. During this year will be rising the arguments regarding the probability and time of easing control over the Chinese yuan and letting it move up. It may put its influence on other currencies. At the same time, the Chinese authorities will act very cautiously and slowly, dealing with the yuan upturn this year. We will be back tomorrow with the next releases. Thank you for watching us and goodbye.